Here's a detailed summary of Morgan Stanley's 2025 Q3 earnings call, designed for clear and concise reading aloud. Morgan Stanley 2025 Q3 earnings call summary. Good morning, and thank you for joining us for Morgan Stanley's third quarter 2025 earnings call. Key financial highlights. Morgan Stanley delivered record top and bottom line performance in Q3 2025. Revenue, $18.2 billion. Earnings per share, EPS $2.80. Return on tangible common equity, ROTCE 23.5%. Total client assets, wealth and investment management reached a significant $8.9 trillion, up $1.3 trillion year over year. Wealth management revenue, a record $8.2 billion, with reported margins at 30.3%. Investment management revenue, a record $1.7 billion, with total assets under management, AUM, at $1.8 trillion. Institutional securities revenue, a standout $8.5 billion, demonstrating powerful operating leverage. Investment banking revenue increased to $2.1 billion, marking one of the strongest quarters in recent years, with underwriting up over 50% year over year. Equity underwriting revenue increased 80% year over year to $652 million. Advisory revenue increased year over year to $684 million. Fixed income underwriting revenue, $772 million. Equities franchise revenue, $4.1 billion, driven by broad-based performance. Fixed income revenue, $2.2 billion. Net new assets, wealth management $81 billion in the quarter. Fee-based flows, wealth management exceeded $40 billion for the second consecutive quarter. Bank lending balances rose $5 billion sequentially to $174 billion. Total end-period deposits grew to $398 billion. Net interest income, NII, increased to $2 billion. Excess CET1 capital, over 300 basis points. Common stock buybacks, $1.1 billion opportunistically repurchased in the quarter. Tax rate, 23% for the quarter, excluding discrete benefits, with Q4 expected around 24%. Efficiency ratio, year-to-date 69%. Management's forecasts and outlook. Future quarters. The firm anticipates a modest sequential gain in net interest income, NII, heading into the fourth quarter, dependent on the rate environment, loan growth trajectory, and deposit mix. Investment banking. The pipeline looks very good across all three regions, and the firm is optimistic for the product category to trend generally upward over the next couple of years, despite potential geopolitical pauses. Wealth management. Continued focus on investing in the platform to broaden and deepen the funnel, with ongoing allocation of investment dollars to drive profit before tax, PBT growth. The 30% pre-tax margin is an output of a friendly environment, not a guaranteed input for future periods. AI investment. Morgan Stanley sees significant opportunities to leverage AI for both efficiency and revenue generation, with early use cases already demonstrating progress. Client assets. Committed to advancing towards $10 trillion in total client assets. Significant risk factors. Macroeconomic and market backdrop. The firm's business model is activity-based and cannot control the broader economic and market environment. Economic and geopolitical uncertainty. These periods are to be expected and can lead to pauses in activity. Regulatory framework. While regulators are moving towards a more balanced approach, the evolving framework remains a consideration. AI bubble. There is ongoing conversation and potential risk associated with an AI bubble impacting investment banking and client sentiment. Private markets and technology sectors. While offering growth opportunities, these areas also require client education, and immediate gains are not expected. Key highlights. Record performance. The quarter marked record revenues and EPS, showcasing the operating leverage of the integrated firm. Capital markets flywheel. The flywheel is taking hold, with strong client engagement across public and private markets. Integrated firm strength. The combined capabilities of wealth management, investment management, and institutional securities are a key driver of performance. Wealth management momentum. Sustained momentum with record client assets, revenues, and strong net new assets and fee-based flows. Institutional securities strength. Outstanding results across all three regions, particularly in equities and investment banking, benefiting from a reopened capital markets environment. AI innovation. Active investment and early deployment of AI use cases to enhance productivity and client engagement. Client asset growth. Continuous increase in total client assets, reflecting the scale and reach of the firm. Regulatory appreciation. Appreciation for the Fed's reconsideration of CCAR results and a commitment to transparency. Lowlights. Macroeconomic sensitivity. The business is inherently tied to the economic and market backdrop, which can be volatile. AI bubble risk. While investing in AI, the potential for an AI bubble presents an external risk factor. Pace of private markets growth. Growth in private markets, while an opportunity, will take time due to the need for client education. Most important statements from leadership. Ted Pick, Chairman and Chief Executive Officer. Morgan Stanley generated record top and bottom line performance with revenues of $18.2 billion and EPS of $2.80. The capital markets flywheel is taking hold as the administration seeks to execute its three-pronged strategy to reshape the economy, with Fed rate cuts likely to continue into next year. The heart of the Morgan Stanley investment thesis remains our commitment to delivering earnings and returns durability alongside continued dividend growth through periods of uncertainty. Morgan Stanley is well positioned in each of our businesses and is demonstrating consistent execution. The business demonstrated exactly what it is built to do. With over 20 million relationships and $7 trillion in total client assets, our scale and connectivity set us apart, positioning us to deliver. Regarding the regulatory capital framework, regulators are moving toward a more balanced approach, leveling the competitive playing field, where the largest, best capitalized financial institutions can once again act as a primary engine to drive sustainable economic growth. Our 2025 year-to-date results demonstrate both the capability and capacity to deliver earnings durability and generate operating leverage against shifting economic and geopolitical backdrops. Sharon Yesilova, Chief Financial Officer. The firm delivered exceptional results in the third quarter, underscoring the power of our global integrated firm and the scale of $8.9 trillion in total client assets. Our early AI use cases are showing progress. These use cases are laying the foundation to drive productivity across the firm. Institutional securities revenues were a standout at $8.5 billion, driving powerful operating leverage. Investment banking activity has meaningfully improved after several years of muted volume. Capital markets reopened and supported underwriting issuance across both debt and equity products. Wealth management reinforced our industry-leading position. A record $7 trillion in total client assets, record revenues of over $8 billion, and continued operating leverage drove margins to 30%. As it relates to workplace, that's probably the most exciting part. I think we're just scratching the surface of what we've seen in workplace. Heading into the fourth quarter, we expect to see a modest sequential gain in NII. Of course, the rate environment, trajectory of loan growth, and deposit mix will all come into play. We enter the fourth quarter from a position of strength, with a combined $8.9 trillion in total client assets, an engaged client base, healthy pipelines, and global reach. This concludes the summary of Morgan Stanley's third quarter 2025 earnings call. Thank you.